Hey guys, it is Julie here with TipRanks. Today we're taking a look at two tech stocks that have been gaining attention from some of the very best tech analysts on Wall Street. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two tech companies that have been getting a lot of attention lately, including new ratings from some of the very best ranked analysts on Wall Street. We're talking like the top 20 out of nearly 8,500 analysts. So we're going to take a look at those recent ratings, what analysts are predicting for the stock's future, and of course, what some of the news behind all the recent attention lately. Just before we get into that, a heads up that the stock market is open on Monday, July 3rd, and then will be closed on the 4th for July 4th. And we are in the final hours of TipRanks' awesome sale where you can get 40% off premium subscriptions plus 50% off TipRanks newsletters. So follow the links down below to take advantage and unlock some fantastic research tools. Now diving right into these tech stocks, we're going to kick things off with Micron. Trading under the ticker MU, they're currently priced at $63.53 per share with a market cap of nearly $67 billion. Now, the stock has seen growth of 17% over the past year, but is fairly flat the last few months and has actually declined 4% this week. The memory and storage solutions providers shared their latest earnings report on June 28th, and I know you must be thinking it didn't go well since the stock dropped, but they actually came out with a narrower than expected loss and revenue that beat expectations. For their third quarter, they did report a loss per share of $1.43, which was 14 cents better than analysts anticipated. Revenue of $3.75 billion beat expectations by $70 million, but did decline 56% year over year. Micron also provided commentary regarding recovery in the memory industry. Their president and CEO said that we believe the memory industry has passed its trough in revenue, and we expect margins to improve as industry supply-demand balance is gradually restored. The recent Cyberspace Administration of China decision is a significant headwind that is impacting our outlook and slowing our recovery. That decision they're referring to is China actually putting a ban on Micron chips. The CAC told domestic firms in China that provide key information infrastructure to stop buying from Micron, saying that products of Micron have serious cybersecurity issues and pose a big risk to the country's key information supply chains, raising cybersecurity concerns. Micron did address this in their quarterly report. They said that the impact of the CAC's decision back in May on the business of Micron remains uncertain and fluid. They currently estimate that approximately half of that China headquartered customer revenue, which equates to a low double-digit percentage of Micron's worldwide revenue, is at risk of being impacted, and that they're working to mitigate this impact over time. Also, just over a week ago, Micron announced a new semiconductor assembly and test facility in India. They'll be investing up to $825 million over 2 phases of the project that will create up to 5,000 new direct Micron jobs and 15,000 community jobs over the next several years. Following that recent earnings report, we have a ton of Wall Street analysts reiterating their price targets. Overall, the Micron stock has 24 current analyst ratings, and about 19 of those have all come within just the last few days. Overall, the stock comes in as a moderate buy based on 18 buys, 5 holds, and 1 sell. The average price target of $76 would be an upside potential of 21%. And you can see we do have a wide range of price targets here with a low of $46 and a high of $100. Our most recent rating did come in just today with a hold. They said that the challenging environment for Micron does persist. And we do have our 1 sell rating here from Morgan Stanley with a downside of 27%. But majority of these are coming in with buy ratings with average upsides from 18 all the way to 41%. And of course, we can see a ton of top-ranked analysts weighing in on the stock. Looking at the ratings from some of those top-ranked tech analysts, we have Rosenblatt Securities giving them a buy with an upside of 58% on the stock. From UBS, we have Timothy also coming in with a buy rating and an upside of 20% on Micron, and then Argus Research, who came out with a hold and no price target, as well as Bank of America coming out with a hold but with an upside of 20%. The second tech stock that is getting a lot of attention from these analysts is NVDA. Their stock currently trades under the ticker NVDA, priced at $423 per share. They have seen incredible growth this past year, up nearly 180%, helping them cross the $1 trillion market cap level. Their stock saw some further jumps up just at the end of May. And of course, that was aligned with their Q1 earnings report, where they came out with a solid earnings beat. For their Q1, they reported earnings per share of $1.09, coming in 17 cents ahead of analyst expectations, and revenue of $7.19 billion grew 19% year over year. NVIDIA has been seeing a lot of momentum regarding AI and made comments surrounding this in that Q1 earnings report, saying that the computer industry is going through two simultaneous transitions: accelerated computing and generative AI. $1 trillion of installed global data center infrastructure will transition from general purpose to accelerated computers as companies race to apply generative AI into every product, service, and business process. And when you look at NVIDIA's recent press releases, you can see AI all over the place. The world's biggest ad agency going all in with AI, NVIDIA's new AI supercomputer, AI's brand new computing platform, turning to AI cloud rental. The list goes on and on. Now, similar to Micron, NVIDIA is also facing some headwinds that involve China, but this time it is the Biden administration that might be imposing some new restrictions on chip exports to the country. Now, they had already tightened controls before, and this forced NVIDIA to create a weaker version of one of their chips for China, but even that weakened chip would not be allowed under the new rules. But analysts don't seem overly concerned with the impact of this. The NVIDIA stock currently has 31 analyst ratings, coming in as a strong buy with 28 buys, 2 holds, and just 1 sell. And one analyst in particular from Morgan Stanley recently increased their price target, making comments on the Chinese restrictions. They noted that maximum impact could be below 10% of data center revenue, and with that in mind, they remain quite confident in near-term results even in the face of incremental challenges. Certainly the concern may weigh on the stock in the short term, but the overall tenor of demand remains sharply up and to the right, and we don't see this as a major disruption. Overall, the average price target for NVIDIA is about $471, which would be an upside of 11%, which is notable considering how much growth the stock has recently seen. We have recent ratings coming in just yesterday, and again, a lot of 5-star analysts here. Those top-ranked analysts include the number 3 ranked analyst out of nearly 8,500 from Jefferies. They gave the stock a buy with an upside of 18%. We also have Rosenblatt Securities giving the stock an upside of 41%. Evercore coming in with a buy rating and an upside of nearly 30%. Bank of America here with a 17% upside, and Piper Sandler coming in with a 6.5% upside. So there are recent ratings from some of the very best tech analysts out there on Wall Street on both Micron and NVIDIA. Let me know your thoughts on these two stocks in the comments down below. It seems Micron is having a harder time seeing some growth, while NVIDIA has just been exploding lately. Where do you think these stocks are going to go from here? I always love hearing from you guys. Keep in mind that these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those Wall Street analysts are up to and providing some information and entertainment. Make sure you always do your own research and due diligence. Thanks so much for watching. Don't forget to hit that thumbs up button and subscribe to the channel as well, and I'll see you back here next time.